The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. A mindset reset and a technical video today to reinforce the importance of keeping everything simple, reproducible, and scalable. Every single week, the markets do the same 3 things. Every single week on any market. They break out, they pull back, and they continue to trend. They break out, they fail, and they reverse, or they stay in a range-bound market, a trading range. Those are the only 3 things that markets do. They do the same 3 things every single week. The challenge, though, is that traders do all kinds of things. So markets only do 3 things, but traders themselves do all kinds of things. They study the market thinking that they will or need to figure it out, to get smarter, to learn as much as they can about the market. But we just said that markets only do 3 things. They make a plan, but they don't stick to the plan. They take trades, but they don't really have an edge in the market on those trades. They're 50-50. Then there are traders who actually stick to the plan. They have an edge. They blow up their trading account and they start all over again. And in a large percentage of situations actually repeat the entire cycle again. So if markets only do 3 things and traders do all kinds of things, what actually needs to change? Now, this is my thought process and my approach, my individual approach, which is how I've put together the playbook. I recognized what I could do well, what I didn't do well, all the mistakes I made repeatedly over and over and over again. And as I repeat in other videos, you make money on the setups and the days where it's really easy to make money on. The problem is that traders don't stick to a plan. They'll take random impulsive trades. They'll do other things on the wrong days that destroy their accounts. They'll act like they don't. They act like they stick to a plan when they really don't. They don't have an edge. They act like they have an edge when they're just randomly taking trades. And so my approach over time had to take daily effort to avoid the enticement of taking trades, catching highs, catching lows, grabbing pips. As I mentioned to a trader last week, amateurs focus on how many pips they can get. Professionals focus on where they have an edge to make easy money, to make money, and then scale it up in size. Trading size on setups where they almost can't lose, locking in the money and walking away, rinse and repeat. And not doing anything stupid, emotional, random, or impulsive, or degenerate in between that could destroy my good results. Now again, I recognize that these are the things that I had to do to work on. It's discretionary trading. Traders always act like they follow a plan and that they will do everything flawlessly on their side of the coin, on their individual trader behavior side of the coin, when in fact they all do the same silly, emotional, random, impulsive, degenerate things in a high percentage of cases once they get behind closed doors and behind the keyboard. So if the markets are the same, but traders do all kinds of crazy things, what really needs to change? Is it the market? You need to learn more about the market, or does the trader themselves need to change? And I repeat this often in the community, is that the trader is the variable. The markets are constant. They do the same 3 things every single week. So for example, we can look at a short selling behavior pattern, and I post this in the community on a regular basis. Does your setup look like this? So for example, if I'm hunting one setup, regardless of any instrument, any market, it's irrelevant. Any session, I can build my watch list each day based on criteria that will bring an instrument up, whether it breaks out on the day, whether it's one of the days of the week in the weekly template. We have people convoluting all kinds of information and changing things. So they're constantly changing their game plan and their approach, which means they're trading things every day based on what the market does. But the market only does three things. So if I'm looking for easy money-making setups, I'm hunting the same repeating setups. Monday starts the week, Wednesday's the middle of the week, Friday closes the week. If I'm looking for the same repeating setups when they present on any instrument, then the criteria becomes simpler for me to stick to because I'm looking for the same setups over and over and over again. And we'll just repeat that and clarify there are only two setups, whether they're V-bottom, A-tops, trap and shift patterns, dump, coil and pump, or pump, coil and dump. There are only two patterns when a setup comes to fruition. Now let's go back to the first slide. Markets only do three things. They only do three things. Now, for example, if I'm hunting one particular setup over and over and over again, the same setup on any instrument, regardless of what other people's opinions are, what markets do is irrelevant. What one individual market is going to do is irrelevant. I'm looking for the 90-10 opportunity, whether it's a session trade, a range trade, or an all-in monkey hammer opportunity to the downside. So if I'm only looking for short selling opportunities, it becomes very simple to bring instruments up on my watch list each day. And is there a setup? Yes or no. Next chart. I don't sit there and try to figure out the market. And that becomes 50-50. I'm looking for the 90-10, which if I'm short selling, that means I'm looking for the A-top or the pump, coil, and dump opportunity. Now, I have several traders who will still go out and do other random impulsive things, and they'll want to discuss what a market's going to do and everything else, and I keep saying to them, I'm only looking for my setup. And why is that? Because I'm not interested in doing all kinds of things and catching every move. I'm looking at one thing over and over and over again, the same setup, rinse and repeat. And why is that? Because that simplifies things. Does it mean I'm missing out on anything? Not in my mind. And that is the only thing that matters. It's discretionary. I'm the one who clicks the mouse. Every trader out there who goes behind closed doors and behind the keyboard, when they do all kinds of things, most likely will end up with all kinds of results. And I love this quote by Richard Dennis. I always say you could publish rules in a newspaper and no one would follow them. The key is consistency and discipline. You only need one pattern to make a living at trading. Linda Bradford Rashke. Now, what can happen, though, on some days is that the train may leave the station in Asia, or it may leave the station in London, and traders can't find a trade anywhere else, so they look for trades. They look for trades to catch a move somewhere. They don't stick to the plan. And as we've talked about, one or two or sometimes three of these opportunities a week can be month money. It's not about how many pips. I'm not interested in how many pips I can get. I want to continuously focus on opportunities that I can scale up in size. Zero stress, zero emotion, zero thinking, and for the most part, zero management. Now, I'm not going to get the same setup every single day. We're going to have session opportunities. We're going to have session range trades that will go from one level to the other side of the range. And we're going to have the same opportunity on a monkey hammer from high of week to low of week as one particular specific repeating example. If I'm focusing on short trade setups, for an example, first red day, page 58 in the playbook, day 3 longs in the market in the playbook, page 51, or inside day, false break reversals only if I'm looking for short selling opportunities. I want to clarify this crystal clear. These all come from the higher time frame template, daily signals. So traders are getting caught in all the little 15-minute charts, the hourly charts, the 4-hour charts, and I keep repeating this over and over and over again. The signals come from the higher time frame templates. Daily time frame is the smallest time frame I am targeting. Remember, keeping things really, really simple removes you from trying to trade markets all the time. I'm looking for the highest probability candidates. Daily time frame signals. Now here's the thing, you can trade any way that you want. Go back to that second slide that we talked about initially. Markets only do three things. But where's your edge? It doesn't matter what I think. It doesn't matter what you think. It matters what you're going to do this week when you get behind closed doors, behind the keyboard, and you put that mouse in your hand. Where is your edge? What is your money-making setup? What opportunities are you hunting? If you can't answer those questions, again, the trader themselves is the variable. Agreeing or disagreeing is irrelevant. Where is your edge? What setup are you hunting? What will bring those instruments up on your watch list if you're following one instrument? What signal will give you an indication of a 90-10 opportunity where you almost can't lose? Traders who go there and trade one market specifically is that there are traders that have that skill set and expertise to consistently make money from one market. And there are others, as we see over time, they win some, lose some, they give it back, some blow up, some slowly can build up an account. But rinse and repeat for me is just looking for the same opportunities in a small basket of instruments, indexes, metals, currencies, energies, rarely cryptos. But if an opportunity presents in the New York session for an A+++ opportunity, wiping out a week in a matter of hours, or an A++ opportunity going from one side of a daily range to the other in a matter of hours with zero stress, zero thinking, zero emotion? Or is it a session trade where we have a 90-10 candidate, but it's going to be for maybe Asia or London or just the New York session? Nail and bail, lock in the money, and walk away. We saw several examples of that on Free Cash Friday. Friday's the closing range of the week. And I mentioned in the community post, Friday is the closing range of the week, and there are two types of opportunities: parabolic trend trades or reversal setup opportunities. Often Friday can be a day of profit taking into the weekend, nail and bail again, locking in the money, walking away. In some situations, as we'll look at an example of that in a moment, holding positions or building positions into the close of the week. Closing out positions. So markets that are potentially now locking in profits and they're exiting positions heading into the weekend, nail and bail. Or we have stop hunt opportunities. They can be range-bound markets, but they're going to go vertical against a previous session that may be in the money. Now, in several of the previous higher time frame videos, the ACB Masterclass, in the playbook, additional notes that we've added in, I've gone over the importance of understanding new month, new timing cycle. Regardless of any instrument, regardless of any setup that you're hunting, new month, new timing cycle, and understanding if there's an underlying bias. I've talked about being long biased the indexes over time. When I get a backside short selling opportunity, I'm looking for that monkey hammer setup for selling. But in the interim, I'm biased to the long side. Why is that? Because over time, money continuously goes into these indexes. Pension funds, retirement funds, hedge funds, etc., mom and pop investors. But the markets over time consistently will go up. We've gone over this in previous videos. I can bring a monthly chart up, and we can just see that over time these markets continue to go higher. We can have years that go down, but my underlying bias over time is going to be to the long side. Now, we just got done talking about higher time frame signals. We also spoke about the three things that markets do. They break out, they pull back, and they continue to trend. They break out, they fail and reverse, or they can stay range bound in a trading range. We just spoke about a Monday, Wednesday, Friday template. Week 1, week 2, week 3, week 4, new month starts. What can bring an instrument up on a watch list? Well, we've talked about that. Markets that close in breakout. Now, Now let me repeat. This is what I do. These are the times that I use. These are the criteria that I use. I'm not interested in anything else. This is what I do. So therefore, I'm doing the same thing regardless of any other opinions, thoughts, reflections is irrelevant to me. I do one thing. I look for the same opportunities every week based on the same criteria. So we have markets that close and breakout. Daily close 4:59 New York time. Now, traders repeatedly ask me, can you go over close and breakout? A market that closes outside of the previous day's high and low range. It closes outside of a previous day's high and low range. Bring up your daily charts, go build your muscle memory, dig in and do some homework. And number two, markets that also break out on the day. So we have markets that can break out on the day. We'll look at two examples of this right now just to clarify the difference. So for example, if we're looking at our daily chart, we obviously had a market on the first red day that broke out on the day at some point and reversed, which formed a wick at the top of our daily range. And we'll look at what that looked like in a moment here. But we also have a market at the close at 4:59 New York time, at the close of the day, that closed outside of a previous daily low. It closed in breakout. So we have a market that gave a signal on the day, and we also have a market that gave a signal at the close of the day. So for example, we have a market that on the day itself, it closed in breakout on the Wednesday, but it also broke out on the day. It broke outside of a previous daily high-low level heading into our New York window. We come to the next day. This market has closed in breakout. Traders in earlier sessions, Asia, London, may have been looking at this instrument because it came up on their watch list, closing in breakout and giving traders in the London window, Europe-London window, the opportunity for the day two continuation down. The New York session opening up down low again. If we're hunting the short selling setup, what I said in the first few minutes of the video, if I'm only looking for one opportunity, that opportunity did not present on this particular day. The train had already left the station. Now we talk about low-hanging fruit in the playbook. Page 96, which is the trend continuation trade. So if I have a low-hanging fruit opportunity, it's a high probability continuation of that existing trade setup opportunity. If that is part of the criteria that you as a discretionary trader choose to exercise. The difference being now that as the trade is already in process to potentially reduce size, we now have A plus session opportunity. The all-in opportunity came at the beginning of the day for a range expansion continuation. Now, one of the most important parts of understanding what's happening here is the timing of when this setup presented for traders. We have low-hanging fruit from the whole few previous weeks that the market may now potentially wipe out. And so when traders understand the opportunity that is presenting from high of month back into traders that were in the money, they recognize the scalable opportunity as opposed to the escalator up and the elevator down. New month, new timing cycle, and the process begins again. Now, the dilemma for some traders is that they know these indexes have volatility and they want to try and trade every movement every single day. And as I mentioned earlier, there are traders that can do that. But if you haven't developed that skill set yet and you're still developing your expertise at trading one particular market every single day, what criteria are you going to use to filter out from taking 50-50 trades to where you are now focused on 90-10 opportunities where you almost can't lose? Now, if I'm looking for the pump and dump setups or the ATOP reversals, if that's what I'm looking for, and I'm looking for opportunities that are going to target level to level, a daily time frame, I'm looking for markets that are setting up at the levels and then gauging on the front side of a week. Is this a session nail and bail? It's a Tuesday. We've talked about the Monday, Wednesday, Friday template, the Thursday all-in opportunities, and understanding where that edge lies, recognizing that we can see breakout, pullback, and continuation trade setup opportunities. In the playbook, we go over the importance of understanding the opening range and initial balance. And why is that? Because that helps me understand what type of template I'm in. We looked at the daily chart. We saw the reversal at the beginning of the month, taking out higher time frame longs and looking at the new month and then the opportunity as the new month, day 1, day 2, day 3, set up on the front side of the month at the beginning of the month in a Monday, Wednesday, Friday template. We said markets only do 3 things. They break out, they pull back, they continue, they break out again. So we have a market that breaks out on the day again on our Thursday, offering traders again a fantastic reversal setup at the high of the month, the new month. Friday was the beginning of our month. We've now made higher highs and broken out again and reversed back into our opening range initial balance. Breaking out, pulling back, and closing in breakout. Again, a market that comes up on our watch list for 2 reasons. It broke out on the day. It closed in breakout on Wednesday, the midpoint range of the week, the reset. And on Friday, the closing range of the week, we have a market that's made higher highs. It's dumped down. The breakout has failed, but it closed in breakout again. So we still have a market now that is in breakout, closing in breakout on Friday, the closing range of the week. Closing price in breakout. Now for traders who were following this market, the NASDAQ, or they're looking for long biased opportunities, again, a market that closed in breakout, higher highs, market still in breakout. Paul Tudor Jones, think of your entry point as last night's close, had the beautiful dump, coil, and pump at the New York Open. Dump, coil, and pump. Level to level. Daily range. Page 29, the basic model for trade entry criteria in the playbook. Keeping things really simple. Now, this is where traders get stuck. They think it needs to be complicated. It needs to be all kinds of minutia and gaps, sweeps, hunts, runs, soups. Markets only do 3 things. Now, this is just a simple example of trading can be as simple or as complicated as you want. Traders will have all kinds of indicators, information, all kinds of different things they're going to look for. My question for each one of you is, what are you going to do this week yourselves? What setups are you hunting where you almost can't lose? The markets are going to do the same 3 things. Now, here's some homework. Traders are going to want me to go through every instrument, but I want you to go through and find the instruments that came up on your watch list for the setups that you were hunting. Going back and understanding the higher time frame, understanding specifically the setup that you're hunting and whether or not the 90-10 opportunity presented in your session. Because next week, when you get behind closed doors and you are at the keyboard, you're going to click the mouse. Do you have a 90-10 setup for making money, or are you trying to trade markets because they're moving, because you want to catch a move? Grab some pips. Now, I want you to think about something. It's not about how many pips you can get. It's about making money. Where's your 90-10 edge for making money? Not getting as many pips as you can. That's my perspective. Where's the setup in my session that I almost can't lose on? And if I don't have that, not engaging in any random, impulsive, degenerate gambling, self-sabotaging behavior, which is what will undo all the good results that I get when I stick to my plan. So when traders say, I did that, it didn't work, my question always is, what didn't work? The markets do the same 3 things every single week. What did you do? What did you do? What setup were you hunting? What money-making setup are you hunting? If you don't know what that is, and you can't even show a picture of it, What are you going to be doing this week that will be different to ensure that you're 1% better, that you can squeeze the maximum amount out of a winning trade setup opportunity? If you're going to leave a trailer in the market to grab more, or are you going to take the bulk off, ensuring that you get paid on a Friday, the closing range of the week, and leaving a trailer close to the close of the day? I don't leave any positions in over the weekend. Number one day for a gap is a Monday. These are all my perspectives, my own opinions. It's not Wyckoff, it's not Beat the Market Maker, it's not GAN, it's not supply and demand, it's not soups, it's not runs, it's not sweeps. It's repeating setups on any market, higher time frame understanding, and then recognizing when I have a 90-10 setup, and whether that's an all-in high of week, low of week opportunity, whether I'm going long or short, whether it's a session trade, an all-in range trade, high of day, low of day opportunity, or a nail and bail session trade, lock in the money, walk away, come back tomorrow, build your watch list, and hunt the setups where you almost can't lose. And if you don't understand what those are, not engaging in behavior that can damage all the good results that you can get when you do all those things right. The trader is the number one variable, because nobody can change what you will do. Once you close that door, you turn the computer on, you get behind the keyboard, and that mouse gets in your hand. Traders do all kinds of crazy things once they get that mouse in their hand. So prepare yourself this weekend. Prepare yourself for 90-10, for winning, playing to win, not playing to win. Hunting setups where you almost can't lose, shutting everything else out, getting off of chat rooms, signal groups, chatting with other traders. Who cares what other traders think? Who cares what anybody thinks? What is your 90-10 edge for making money? Everything else is gibberish. It's smoke and mirrors. It's conversation. It's distraction, social media, all these other things. If you don't know exactly what you're doing, you're in the 50-50 category, the 49-51 category. Pros hunt setups where they almost can't lose. Amateurs get high from the action, as Alexander Elder says. Which side of the coin do you want to be on? Playing to win or just playing? Keep it simple, traders. Make this your best week ever. 1% better every single day. Keep it simple. Have a great weekend, and may the markets go with you.